ice in the glass. Mike's on the table, laugh as we pass.
Hello, everybody. Welcome to our special edition of Friday Drinks this Friday. And it's Shumba. Good to have you, my brother.
Yeah, it's good to be back in Harare. Good to be back in the studio with our good friend Simba here to talk about something quite interesting.
Yes, I'm sure. You can see we all look red and black. Simba, welcome to the show.
Thank you for that, and thank you for dressing appropriately.
No, look, it's I can dress on. I can wear this like any day. It looks good. So thanks so much, our viewers. Today we are bringing you a very special, edition of Friday Drinks. We want to talk about a product that we see as sort of revolutionizing the way local investors invest in gold, invest offshore, and get into hard currency assets. For those that are really well attuned with the investment platforms and sectors, they would understand that this issue of investing offshore or maybe getting hard currency assets in your portfolio has been at the forefront for a long time. And one of the issues that we were encountering were some regulatory hitches in terms of what you can and cannot do. And our good friends at First Mutual Wealth came up with this very interesting product that would like Simba to just help us understand, and even for our viewers to sort of appreciate what the First Mutual Wealth Gold ETF is all about. And I was just going through the prospectus and like, this is great. But also I found it to be quite technical, and that's why we have got Simba here.
To dilute it.
To dilute it. And there's a statement that we used to have on the show that explain it the way you would do to a 6-year-old. And that's why we have Simba today. So I think, Simba, once again, welcome. We'll just give you this platform to really walk us through what this gold ETF is all about, what should investors expect, and why is it being launched now. So it's really up to you. So over to you.
Well, thank you, Ranga. And again, thank you for having me. The First Mutual Wealth Gold ETF, I would say, really is a product that came about from just seeing a missing gap in the market. We got a lot of expression from our clients that there really isn't a long-term investment product where you can reasonably invest in and be assured of wealth preservation and returns in the future. And by the future, I don't mean 3 months, I don't mean 6 months. It can even stretch to 20 years if you so desire. So that's where the First Mutual Wealth Gold Exchange Traded Fund actually came from. Gold is a natural hedge against inflation, against value loss, even against currency depreciation. If you look at the price of gold, 20 ounces of gold in 1926, and the value of that gold now has grown over 240 times.
Okay.
But $20 US dollars in 1926 and now is only worth 5% what it was.
Okay.
So the product is just coming to the market and offering retail, corporate, pension funds, high net worth individuals an opportunity to participate in this commodity called gold.
Okay.
That has obviously stood the test of time in terms of hedging against value loss and actually growing wealth.
Okay. Maybe you can explain it further to some of our viewers that may not be experts in financial and capital markets. So what does it mean? Are they investing and they're getting gold at the end of it? Or
Like gold coins. And
Yes.
I think we then did digital gold coins.
Yes. So it's definitely there's someone out there who wants to really understand how it works. Just simplify it, to the extent possible.
Okay. So the First Mutual Wealth Gold Exchange Traded Fund is essentially a bundle of gold assets.
Okay.
50% of the fund holds what is called the One Invest Gold Exchange Traded Fund, listed on the Johannesburg Stock Exchange.
Okay.
And the other 50% is actually 4 gold mining companies each equally weighted, 12.5% each to make up the 100%.
Okay.
So the gold mining companies currently, it's Harmony Gold, DRD Gold, Goldfields, and Anglo Gold Ashanti.
Okay.
And with as little as $100,
Okay.
you can actually purchase these listed assets.
Okay.
I'm glad that you brought up the issue to do with gold coins. So to buy a single gold coin when it was launched, I think the price was around $1,600 an ounce. And that price point is a very high price point for the retail investor in Zimbabwe.
For the average Zimbabwe.
Yeah. So the gold ETF actually allows you to invest with as little as $100. So with $100, you go to your broker, you come directly to us, you go through CorpServe, the transfer secretary, and you say you want to purchase this gold exchange traded fund. It's currently trading on the VFEX at 14 cents per unit currently. So you can actually buy a bundle of those and get exposure to those gold assets from as little as $100. And the good thing about it is that you can purchase it on the VFX, right? So if you've got buyers and sellers on the Victoria Falls Stock Exchange, you can buy and sell units on that market. If the VFX doesn't prove liquid enough, the same underlying assets, the JC listed assets that I just mentioned, trade actively in South Africa. And we can actually sell those assets to give you that same liquidity. Or if you want to buy, you can buy directly through us on that exchange. So I would say for the retail investor that's thinking about, buying gold and they think that, $100 is certainly not enough, this asset gives you that exposure. There's also an added layer of the gold ETF being listed on the Victoria Falls Stock Exchange. Means that it's regulated. And regulation is always good because it then compels us to report on that asset. So we'll be compelled to actually report how the fund has grown, how it's actually performed. And the trading information, given that it's actually listed, is actually there for everybody to see. We're quite proud in that, when the gold ETF listed, slightly above 10 cents a unit, it's now trading at 14 cents per unit. So all the early subscribers...
That's 40% upside. That's huge.
That's huge.
So guys have already done quite well.
Quite well. It also shows the massive interest. So pre-listing, we had a target of raising $1 million just to list. The exchange gave us a target of 500,000. Our superiors, our board, gave us a target of 1 million. We managed to list it at 2.4 million, the fund value. So it just actually shows the massive interest. And subscriptions are still open. We're still getting subscriptions. I think right now we've got an additional 600,000 that's actually just awaiting to purchase additional stocks on the Johannesburg Stock Exchange. The fund is open-ended, which means, if you still want to purchase,
You can
come to the party.
you can still come. So I think I maybe take this point for some of the subscribers that actually purchased or wanted to purchase the gold ETF and they saw the 30 April closing date. The closing date is not to say that the subscriptions have closed. It was just a marker date for the VFX to say, as at 30 April, how much had you raised? So that they could list how much we had raised. But we haven't closed subscriptions. We're still actively receiving subscriptions to actually purchase that asset. And we think it's a good asset because, look, the assets are listed on Johannesburg Stock Exchange. So you're diversifying country risk already. And by it listing on the Victoria Falls Stock Exchange, it's going to be an international financial center. That is another added layer of protection in terms of receiving your US dollar returns for that product. So
even if there's a modern currency tomorrow, it's not regulated by the Reserve Bank of Zimbabwe. It's a special economic zone. You always have exposure to a hard currency US dollar denominated asset.
Definitely. And if you look at the insurance industry, the pensions industry in particular, pensions work when you've got that advantage of compound interest, right? We've been going through so many episodes of exchange rates, shocks, hyperinflation. So there's never been really that, I've got this client coming in today, they're starting work today. In 20 years, they're going to retire. I need liquidity of X amount to service this guy. We really didn't have a 20-year asset in our investment industry. So we're quite proud in that it's a first of its kind that can actually offer even other asset managers an opportunity to actually invest in an asset that can match that long-term liability. And the good thing about it also being at a retail price point of $100 coming in is that even the retail investor can participate. You've got long-term savings. You want to save for your son's education. You want to save for your first vehicle in a transparent and clear way. You also don't have to worry about, buying gold and putting it on the side and, it getting stolen or even inflation. So there's one thing that a lot of people maybe... Zimbabwe, we harbor so much safety in the United States dollar. The United States dollar is prone to inflation. US inflation right now has reached an all-time high of 3.8%. They are comfortable with 2%, but they're actually at 3.8%. And the gold price reacts whenever the US dollar weakens. The gold price actually goes up.
I was actually looking at a chart earlier showing how much money supply globally has increased since COVID. It's almost doubled since COVID, because the amount of printing that governments across the world, including the US government, it's massive.
Yeah. And that's
and that's why the gold price is where it is, because the gold market is saying, that money isn't worth that much anymore.
So interesting. Our viewers, we can actually see how excited we are about these products as capital market players. And you know what, guys? And so to meet the airlock, you can drink. We can have some drinks.
We've got a tipple.
What are we having?
We've got some. That looks like Gentleman Jack.
Okay.
You do the descriptions. I'll describe the ETF. You can describe the whiskey.
Oh yeah, it's a bourbon. It's an American whiskey. The Americans do things differently in the world of whiskey. So they spell it with an E.
Okay.
Everybody else doesn't have the E in the word, and it tends to be sweeter than its Scotch counterparts. It's a different. I wouldn't say it's better or it's worse. I think it's a different experience completely, and one that I enjoy. I mean, I'm not. I enjoy a broad variety of tipple.
You enjoy as long as it makes you, it gets you drunk.
This guy. Anyway, So it's always a pleasure to have somebody on the show who actually appreciates these things and not the two teetotalers.
Gentlemen, enjoy your tipple, eh?
That's small.
Yeah, I'm doing this pulpy, Minute Maid pulpy. It's an orange juice drink. So yeah, look, I'm glad to.
Very colorful, almost pink.
Sweet and cold.
Yeah. So look, thanks so much, Simba, for that strong intro. So maybe you just need to dive deeper into the mechanics and what it means for the investors. So I was just looking at the prospectus, and it says the ETF combines both the physical gold ETF, which is the one invest, and the listed gold mining equities. So maybe one would ask a question: why not go 100% physical gold exposure? Why introduce mining equities into the structure? So we just want to see what really motivated this kind of structure.
So thank you for that question. So, investing exclusively in gold can be a strategy that can work for, some of those buy and hold investors.
Okay.
But we thought that, and just even looking at the history of how gold rallies actually work and what happens to gold mining companies is, whenever there's actually a gold rally, the gold mining price listed company mining prices actually go up higher than the actual gold price because they're leveraged in the production. Yes. So our target is to actually have an ETF, that can actually rival the performance of gold when it's actually going up.
Okay.
The second reason is, the companies that we've actually selected, they're quite mature in that they've actually invested heavily in their mining operations. They don't really need to put in a lot of capital anymore. So, in sections where they actually have very attractive gold prices, they pay out a lot of cash in the form of dividends. So if you're just holding gold, you actually don't get a dividend. But with holding a gold mining company, you actually get paid for taking that risk. So those are the twofold reasons to give the gold ETF leverage in capital appreciation, and also to have a dividend income to also assist in those lean periods as well. So that's the main reason for the split. Otherwise, somebody would argue to say, I've got my gold coin here. Well, what's the issue? You're actually getting something extra through the gold ETF.
For the entire time that I've been in investment banking, there have been conversations about a gold-linked, security that the retail market and institutions can invest in. And I've actually personally sat in brainstorming sessions where people were, trying to put these things together and figure it out and list it and market it. And all of these initiatives basically failed. They just fell through. And so kudos to you and your team for actually crossing the finish line and delivering something that's people can transact in. Perhaps just for the benefit of myself and some in the audience who are interested, what was it like baking this product? What was the journey like? From you guys coming up with the idea, because I think people have been talking about a gold product.
For a long time,
how to make the capital markets have exposure to gold for the longest time. So what did you guys do differently to actually cross the finish line?
Yeah. So thank you for that question. I think quite an important one. We largely base this product on customer needs. And it's one thing to look at customer needs, but then it's also another thing to look at the regulatory environment as well. So it was quite taxing trying to find the middle ground. I'll give you an example to say, as much as the brainstorming was, look, gold is easy to understand. It's something the clients want. They need a low price point. Those were the simple things. The complicated thing was now look at our regulatory environment. So for one thing is, when we started brainstorming about this product is, you actually needed a gold license to buy physical gold. Okay. Us as an institution, we're not willing to go to that route because then certain, governance structures have to be made. It's also quite costly to actually have a physical vault, that secured gold, and that you can actually convince the authorities that public funds are going to be safe investing in this. So we kind of scrapped that off. Then we also looked at, the fluid nature of the policy environment and how our clients were thinking about diversifying offshore. And then, one key input into the actual weighting of the gold ETF is, if you look at the IPEC guidelines for pension funds, they say a pension fund, when investing offshore, cannot invest more than 50% in a single asset class, hence the 50% gold ETF.
Into the ETF.
The exchange, the actual gold ETF. And then no single investment can be made that is more than 15% in a single equity investment. Hence the 12.5.
Oh, that was clever. Yeah.
So our friends at the central bank with the vaults that they were showing off earlier, better off just giving us a call as stockbrokers and just wiring a bunch of money, and we just buy this product, because to me, I think it's cheaper than actually maintaining a physical vault and doing all the admin of picking up physical bars of gold from Fidelity and storing them somewhere and securing them, and then having somebody come and count and check that they're still there periodically. Are they not just better off wiring money to a stockbroker and having this fantastic exposure?
I think for the RBZ, and kudos to them, because they also had input into the product.
Sure.
They're the first ones to introduce a gold coin and offered it to the public. But we thought that, a lot of people wanted to buy the gold coin, but the price point was too high. And you also have to then look at the RBZ's motivation for holding that gold. They're trying to build confidence. So it literally has to be national gold in the vaults. So I think our motivation
That's
is
why it's important.
I suspect that the market will have much more confidence
but
in the First Mutual Wealth ETF
Fort Ops,
than a vault at number 80 Sabarama Shop.
No, but they'll miss an opportunity for a photo op where you say, these are the gold
These are
bars.
the gold bars.
Yeah.
Physically push them up.
Yeah, but I think what you guys did was really brilliant, which us in the financial sector has to do in terms of innovation.
Yeah.
That for the longest time, like what both of you gentlemen have already said, the market was clamoring for a gold sort of linked product. More so now when the price of gold is
And the outlook is bullish.
it's where it was, and gold is one of our big export earners, and to have a market that didn't have a way of getting exposure. When you look around in terms of our listed space, we don't have any listed gold mining companies of note. The few that are there are actually struggling. You'd wonder if they can't make money at 5,000. That's a story for another day. But maybe you may want to speak to the investment thesis, like as you're addressing the investor or the potential investor and the ones who are already there. What is it that this ETF brings to them? Is it the currency hedge? Is it, the inflation, dealing with the inflation, or getting exposure in a global, in commodities and things like that? Maybe someone who's looking at it that might need to be convinced. Or what are sort of the investment thesis that you would want to push to them?
Okay, so I think just even from the description of the asset itself, it's got a gold theme. And when we're looking at gold, what are we really looking at? What's the attraction? If somebody's holding gold, what is that comfort? The first comfort for gold is that even when currencies weaken, right, the gold price goes up. So as much as somebody might be housing, their foreign currency at their home under the pillow or the National Metros Bank, that money is actually losing value.
For sure.
Right? So gold is a hedge against inflation. That's the first theme. The second theme is that if you look through history, global inflation versus the gold price, you really look at where the gold price is in inflation. Gold is a natural hedge. It actually performs better in terms of price return compared to just holding physical cash. And then if you look at in turbulent times, there's massive demand for gold. When we were looking at even some of the global forecasters of the gold price before the Gulf War actually started, we had forecasts of $6,000 to $10,000 an ounce. Wow. And some of them were saying that it's actually quite conservative. Wow. And it actually peaked at 5,300 before the war actually started. So our anticipation is that, look, this is an asset that gives you a window into that market. Okay. I don't think we've got, a company, like you rightly said, that you can actually buy into that price appreciation. And we also wanted an asset that, is not hemorrhaged by a policy change in Zimbabwe. Okay. Case in point, we've got mining companies in Zimbabwe that are also listed, and even our regulators even asked the same question to say, why aren't you purchasing, the local companies and gold mining companies that are listed already? And I think, one of the gold mining companies is listed on the Zimbabwe Stock Exchange is struggling. All their revenues in US dollars, but they publish in ZiG for some reason. Then you've got Caledonia. Good mining company. We've visited the mines, excellent producer, but there's just simply no scrip. Okay. You can't get that share, So we didn't want to be haggled by liquidity constraints to say, look, we've got a bunch of investors here, and they can't get, the scrip. And then we looked at the Johannesburg Stock Exchange, and it's an interesting fact, and I think it's something that also tells us that there's so much potential. Okay. So in South Africa, what the JSE trades in a week, the ZSE and VFEX combined trade in a year. Wow. So we're just also speaking to the level of liquidity that this asset has. You don't want to be in an asset where, look, I've saved enough money, or the gold price has rallied. I want to liquidate my exposure and get that tangible return. So when we looked at gold as an asset, it just ticks a lot of boxes in terms of long-term savings, value preservation, and capital appreciation. So anybody who's looking to get exposure to that market, I mean, the price point at $100 is quite low. We think that that's a perfect time to start. And you can never start saving too early. And then even for long-term pension funds, look, what product can give you that security for the next 5, 10, 12 years?
Yeah, you can imagine, like, with the 2 bouts of hyperinflation that we had, if 25 years ago, the capital markets had access to such a product, perhaps a lot of people who worked, and contributed to pension funds for 40, 50 years, today would actually be getting a meaningful pension, because the gold price has done phenomenally well over the last 30, 40 years, and the outlook is bullish because governments print. I mean, and it's not just a Zimbabwean phenomenon. Like, even if you look at the US, one of my favorite intellectuals, Tom Sowell, he makes this point that even if you keep cash in a safe, it's still not safe from politicians' propensity to print. So if you had $100 in a safe for 100 years, you lose 90% plus of its purchasing power.
And for a pension fund, that's so it's actually twofold. To say, like, I just sorry to ride on your point there. If savings, the savings of some of these pensioners were coming real today after 25 years, can you imagine the level of capital investment that would still be circulating in the Zimbabwean economy? Never mind,
it'd be massive.
It would be massive. Companies can actually have capital because as the pensioners spend that money, it liquidates, it keeps the economy moving. So we really thought that, such a product we're not saying everybody, look, you're compelled to buy this, but it just makes so much sense to have an asset that gives you that exposure, because it ticks a lot of boxes that you have to do a lot of thinking to navigate some of the risks that we experience in this market. So, gold was simple for us. We just had to find a way to make the regulators smile. And they've been very helpful in the launch of this product as well, but also tick the boxes that the consumer also wants.
And maybe the question would be asked, why VFX and not ZSE? What really motivated the
Is that a serious question?
This guy is a stockbroker who is really... he's professional.
Look, we would make more commission on the ZSE because stockbrokers earn 0.92% commission on trades on the ZSE than VFX, where we only charge 0.6%.
So we really,
but it's not a serious question.
Simba, you're allowed to respond to that. Not so serious question.
I'm happy to answer that question. So the VFX...
I'm going to take away this bottle because I'm seeing that it's getting to you. But you can go ahead. Yeah.
So the VFX, like Rufaro is actually indicated, it is cheaper in terms of the transaction cost.
Okay.
But I think the biggest issue for us is, and we're also happy that the SI actually came out, where it's actually becoming an international financial center. It's a special economic zone. It is protected. Also, the entry point being United States dollars makes it very, very easy as well. Also, the process of remitting United States dollars to purchase a real asset offshore is easier when you're holding a hard currency that's recognized. So the purchasing process also becomes quite easy. So also remember, it's twofold. So we've purchased the asset. So the local investor can trade the asset on the VFX and enjoy those lower transaction costs compared to the ZSE. But also when we're purchasing assets on the Johannesburg Stock Exchange, Ranga, do you know that brokers charge 0.2% as brokerage? We
would love to charge even 0.1%, but our market is tiny.
We need to grow the volumes.
Yes, we don't have the volumes.
So those are the principal reasons to say, look, the VFX is an avenue for local investors to participate locally with the asset. And the VFX being a special economic zone is that added layer of security.
Okay.
And the transfer of US dollars. Imagine, you wanted to buy the asset offshore, you're gonna first have to convert ZIG into United States dollars, then United States dollars purchase on the exchange, and so
And
it just
good luck
makes
trying to open an account with a broker outside Zimbabwe.
that's another hurdle as well. I think you're quite versed in how
Yeah,
this
no,
is
it's
actually quite
not
complicated.
a cakewalk.
Yeah. Also, if you go to your personal bank and you've got your $100 for a retail account,
Okay.
the TT charges, I've heard $20 to $40. We're offering you an opportunity to ride on the big investors because we're consolidating all that money, so you're actually not charged the transfer charge. You can literally buy. It's such a more cost efficient way to actually get invested in gold, because if you're you've done all the checks, you've opened a foreign brokerage account, now you're getting these massive charges just to get money into the account before you purchase the gold. So we think it's a good market, and I think even if you look at the rules that govern the Victoria Falls Stock Exchange, it is the more appropriate market to have the gold ETF listed on.
And who are you targeting?
So we're literally targeting everyone.
Okay.
The retail investor, the price point at $100 minimum investment. For corporates, it's $1,000. But we're also targeting high net worth individuals.
Okay.
Like you said, keeping your money in the bank, it's not guarded against inflation.
Okay.
Keeping your money in a safe. People are printing money. Inflation is eroding that value.
Okay.
And then we're also charging pension funds to say, in terms of long-term savings, if you've got an allocation, you're saying in 20 years, you've got a 10% liability of the entire pension fund that needs to be liquidated.
Okay.
So we're literally charging design the product for the entire spectrum of the investment universe in Zimbabwe. It just then depends on the aggressive nature of the investor to say, am I putting all my bets in gold, or I'm also happy with equity? I'm also happy with a little bit of cash, in my bank. Or, you just want to do 50-50, see how it pans out with part of your portfolio. If it performs well, then maybe you allocate more. But yeah, it's an investment for everyone in the Zimbabwean market. And we think that, we should take advantage of the international price of gold right now and participate in this product all we can.
And for a few minutes, I'll just allow you to address few very technical viewers of Friday Drinks. Because here I'm trying to balance, the conversation.
The 6-year-olds and the adults.
Yes. Exactly. So maybe at this point you might want to address the adults in terms of the taking calls. So the ETF says it's a passively managed fund, fully funded. You've already spoken about open-ended. Maybe you can just articulate on those three aspects: passively managed, fully funded, and open-ended. And then there's issue around rebalancing, where you're saying the rebalancing will be done based on what FMW research considers as the most undervalued blue chip gold mining companies, etc.
Yeah.
Then maybe the last bit is around in-kind creation.
Okay.
Investors may apply for cash creation and cash redemption of the units through authorized participants on the following terms, what. So I just want you to just address those very technical. Since, the reason why I'd ask you about who are you targeting. So it's the retail and the institutions. And the institutions, obviously, they are manned by very technical people.
They understand.
That might
Hopefully.
that might really want to. So yeah, just briefly so that we don't
Leave
the
behind.
6-year-olds are sorry.
All right. So no, thank you for that question. So, and remind me for any points that I might forget along the way.
Okay.
So in terms of passively managed, what we are literally saying is, remember, I did say that 50% of the fund is the One Invest Gold exchange traded fund, which just holds gold. And then the other 50% are 4 mining companies, 12.5% each. These are live markets, however.
Okay.
Right? So gold might go up at a faster rate than the mining companies, and it might end up having 53%, and that balance is then now skewed 53%, 47%.
Okay.
So every 3 months, if gold is the one that rallied, we sell the 3% and purchase additional gold mining shares. If it's vice versa, gold has gone down, and the gold mining companies have gone up, we sell to the 12.5% level, reinvest in the gold ETF, so that you know exactly what you're investing in. 10 years from now, that's the ratio. So you don't want a situation where after 5 years it's now 90%
Yes, okay.
mining companies and 10% gold. So that's the passive nature of the investment, so that you know exactly what asset you're actually purchasing. And from our experience so far with the ETF is it's actually outpaced the performance of the gold price because of that rebalancing. Because whenever a company loses value and we buy more of it when we rebalance, and then its results come out quite good, we actually earn more.
Yes.
And we actually, when we're selling, we're actually crystallizing the gains and making the fund actually grow.
And what do you do with dividends?
So dividends, if you note, the prospectus does say that the fund costs are around 0.7% per annum. So when the dividend comes through, we take away the transaction, the management fees for actually managing the fund, and the excess is paid back to unit holders.
Okay.
So the trust deed actually tells us that we cannot hold cash. That's true to the investors. We are saying that every 6 months we actually pay out that dividend. Why? Because there are 4 gold mining companies. So one of the companies actually has a year end in September.
Okay.
So the dividend payments are not on the same dates. So for the 6 months, we actually accumulate the dividends, subtract the fee costs, the excess goes back to the unit holders.
Okay.
So that's how we actually treat the dividend. We've also done some backtracking. So because these are gold assets, because one of the questions is, but you're buying assets that are in rand on the Johannesburg Stock Exchange. What if the rand, collapses in value? It's that same adage. Because it's gold, the gold price adjusts in sympathy, even in rand terms.
Yes.
So
And the gold companies do better because their costs are in rand.
Exactly.
And but their sales are in US dollars. So if the rand takes a beating, it's actually good for your fund.
exactly.
And the rand is going to take a beating going forward. I mean, that's just
So it's actually been quite amazing, where you see some of the net profit margins of the gold mining companies that we've selected. They've got net margins of 23, 25%.
that's massive.
I think even should be Harmony Gold actually had a net profit margin of 31%.
Yeah, that's huge.
Aglo Gold Ashanti declared a dividend, which we did receive, by the way. That was almost 100% higher than its last quarterly, not last year.
Wow.
Last quarterly dividend. So we passively manage those returns so that we just pass them on to the investor. Then in terms of in-kind creation, that's actually the process where the investor gives us the money, subscribes for the gold ETF, right? We then purchase the securities on the Johannesburg Stock Exchange.
Okay.
So we've got additional assets in the fund now.
Okay.
And in exchange for those additional assets in the fund, we therefore distribute those units to the investor in kind because they've already subscribed for those units. So that's the in-kind creation. Where
So maybe this you are targeting like your big institutional.
So it goes both ways. I think the retail investors are the ones that are benefiting the most.
Okay.
Because you can imagine a situation where an investor, a big institution, places $500,000 to purchase those assets offshore. The retail investor has $200, $100, $500.
They're not going to. A broker's not going to talk to them.
Yeah, you see. But we will happily, accept that subscription, and they actually enjoy lower costs. The other costs, First Mutual Wealth being a part of a bigger First Mutual Holdings Limited group, we're actually footing some of the exchange costs, like having the index actually calculated. It does cost money because we have to pay for that on the Johannesburg Stock Exchange. And then as the fund grows bigger, the audit fees are fixed. So if the audit fees are $5,000 for the fund, the overall cost on 2.4 million is quite small. If it grows to 10 million, that cost is actually shrinking. And who benefits? The unit holder. Because those costs are clearly prescribed in the trust deed, and we have to abide by that trust deed. So all those benefits will just definitely accrue to the unit holder. I'm not sure if there's any other.
Yeah, maybe the issue around being fully funded. The reason why I'm asking is, maybe someone is worried, and I think you've sort of partly answered it when you said you're not going to keep cash.
Yeah.
Yeah. So it's not some sort of a derivative structure where you're saying you want to mimic the performance of Hammond Gold, the performance of Shant, and all these. You're actually investing
in the the security.
Maybe you might want. I'll give you an opportunity to just really unpack that, so that you allay any concerns or fears around. Kotkazoti. Tunaona kune something.
Move out.
Yeah, no, so thank you for that. So the money that our investors give us, we're actually purchasing actual securities.
Okay.
In the case of the mining companies, we will actually appear on their shareholder register as First Mutual Wealth Gold ETF.
Okay.
They actually own portions
Okay.
of that company. So they're physically owning the security. You know, when it comes to the gold ETF, so the gold ETF, what it simply does is every time it deposits gold in their vaults, they then issue an equal value
In
ETF
units.
units.
Yeah.
Right?
That's
so,
how these things work.
So we're literally purchasing gold. And the added layer for that gold is that the custodian is JP Morgan Chase, and they've actually insured
One of the biggest banks in the
that
world.
gold. So,
Yep.
you know, we're not trying, so we don't have the headache of saying, oh, look, how many gold has gone up by 3%? What fixed income instrument can we purchase on the side to?
Okay.
No. All we're doing is we're purchasing the asset, and it will track the performance of these assets. Where the difference might actually come out is not on the value of the asset, it's actually on the price on the VFX.
Okay.
But I think this is where brokers come in and other smart investors come in, because we display the value of the asset on our website, the net asset value of the asset on our website. I think the most recent price is 11.9 cents per unit currently. On the VFX, it closed trades yesterday at 14 cents.
Okay.
And I think the 14 cents on the VFX is just reflecting the demand.
Okay.
You know, the supply and demand dynamics of that. We also have a market maker on the VFX that's also giving script to investors that probably want to purchase directly on the VFX as well. Just so that, you know, the trade is also fluid and continuous. So, Ranga, to answer your question, yeah, if you knock on my door and say, it is there. The shares are there. The gold is also there. It's also insured.
And what is the reporting framework like? I mean, are we going to have photo ops?
I think, Ranga, the only thing I can really show viewers is the certificates. I unfortunately I cannot have the same muscle for the photo ops that you've been seeing in the press.
Maybe you'd want to speak to the liquidity of this ETF.
Yeah.
Firstly, because of the general liquidity constraints that we have on our markets, and where you have placed it on the Victoria Falls Exchange.
Yeah.
What's the plan, and what are you expecting in terms of the liquidity of the fund?
Okay. So I'll be very honest with you, Ranga. I think I did mention that, you know, we had a target from the exchange of saying a minimum of 500,000. Our board put a target of $1 million. And we listed, we had like 2.4 million.
Okay.
And there's an additional 600,000, you know, that we've actually put in the queue for additional purchases. So, you know, the participation has been, you know, higher than what we've expected. So naturally, the initial float on the VFX was not what we expected.
Okay.
But if you read the prospectus as well, we've also hired a market maker to ensure that there's available scrip for retail investors that are also participating on the market. So we do have shares that we've already purchased in the past, units that we're actually offering to the market to offer that liquidity. But also, as subscribers come in, there's a very deep market in South Africa where scrip is actually going to be available. I mean, when I was looking at the combined trading volume of the individual securities, I would say Anglo Gold Ashanti at one stage, you know, just in one day traded $10 million US. That's the entire value of our initial, you know, exchange control approval. So there are actually two sources of liquidity. You know, the VFX, given local dynamics, and the offshore market, which is significantly bigger, and we think that market can actually absorb, you know, all the liquidity that we might actually target. We do aim for the fund to actually grow. That's why it's open-ended. So depending on the appetite that the market does show us, we might actually be going back for a second tranche to actually breach the 10 million and go further. So yeah, we're not too worried about liquidity because I think it's the only asset on the VFX where you can directly get liquidity from the VFX and indirectly on the Johannesburg Stock Exchange as well.
Yeah. So one of the things that the capital markets in Zimbabwe has struggled with, I just want to double click on this liquidity issue, is everywhere else in the world, when you own securities, the banks are quite happy to give you credit on the back of the security because they know that they can execute. And the discount between the market value and how much they're willing to advance you isn't that big. I think in Zimbabwe, traditionally, the banks want 2 times cover. Sometimes they want 3 times cover, even more. So what is the nature of, like, if I buy $100 worth of this ETF, what is the nature of the security that I'm holding, and how easy is it for me to have a conversation with my bank to say, hey, you know what, I've got the security, it's a hard currency, the underlying asset is a hard currency, and it's highly liquid.
Yeah.
Please give me a credit card. I want to be able to spend $75.
Yeah.
Is that possible? How easy is that, such a conversation?
So I think that's also, it's quite a good point, and it's a clarion call for our banking sector as well, to recognize, some of these assets that we're listing. It's an offshore asset. The underlying is an offshore asset. It trades significantly higher liquidity than what we're seeing on the
And
VFX.
everything in Zim, for sure.
So I think it would actually take the bankers to just really peek into what this asset is. Certainly, I would not be willing to take a 2 times cover security on the gold ETF. It's literally almost 1:1 because what we also then forecast for the gold price is also it actually going up. You might actually come into a scenario where you're like, look, guys, I gave you my gold ETF in May. We're now in December. It's now 75% more than what it was initially. So why are you holding so much security? Give me back part of my portfolio, so that I can actually hold it. Because we do think that the gold price will actually go up. With what America has done in terms of becoming a less reliable trading partner, it might take a knock on the US dollar. And I think the gold ETF should not be looked in the same vein as, even properties take a knock when you go to the bank. But this is highly liquid and offers a dividend. It's got offshore diversification. So why are you going to compare these assets as the same? It's certainly different. I think it's actually a better form of security. So yeah, I'm appealing to the bankers as well. If you've got the smart investors that you want to securitize this asset, give it that recognition that it might actually deserve.
And the issue of securitization really is not really on the banks, because I think it's actually the central bank that has
Discourages
securitization banks from securitizing listed instruments. Then let's talk about the foreign currency exposure.
Yeah.
So this instrument is trading in USD on the Victoria Falls Exchange, but underlying it, we have got a listed ETF on the Johannesburg Stock Exchange. So that is trading in rand. Yeah, and also you've got the mining equities themselves also, they
Trading in rand as well.
Rand.
Yeah.
Yeah. So you've got the gold prices as a variable, but also you've got this USD rand exchange rate and all this. How have you sort of anticipated that, and how should a typical investor look at this layered risk exposure?
All right. And thank you for that question. So it's something that obviously was a concern for us. Even our group investment committee did bring up that question, and to say, look, this asset, yes, is gold, but we are in Zimbabwe. We are more familiar with the US dollar. What does this asset actually look like in terms of US dollar returns?
Okay.
Right? So we actually did a simulated back testing of, if I was holding this asset and this is the rand value, and this is the US dollar exchange rate for the South African rand. If I was holding this asset for 1 year, for 3 years, for 5 years, what's the sort of return in US dollars that I would actually have? And you know what, Ranga, the compound annual growth rate is actually 29% in US dollar terms.
Wow, that's huge.
And even upon listing, so we initially had private placements that we were doing in the market from November, and they got in at around the 10% level, 10 US cents level. They've actually returned almost 29%, which is actually better than the in US
And
dollar
this is in
terms.
USDs?
This is US dollar terms.
Okay.
So I would say that underlying gold theme hedges against the rand volatility, because from November to May, the rand has hit 18, has hit 14.
Okay.
But the gold returns have been much more stable than the rand volatility. So I would say, I think even the South African market, they do recognize that gold has a certain price, and those assets need to move in sympathy with where the gold price is.
So I'm going to ask an
okay.
interesting.
Okay,
Yeah.
that's fine. You can go ahead then. In fact, I was going to ask you, then you can add whatever you want. Oh, so Simba here obviously is selling his product, which is what we can we are encouraging to. You're an independent guy. What stands out on a positive note on this product, and what should investors be cautious about, like when you're assessing it sort of independently?
Look, you're exiting Zimrisk
Okay.
fundamentally.
Finally. Because people always wanted to exit Zimrisk. Yeah.
Right, and you're holding an asset linked to gold, and gold has got a track record over thousands of years.
Okay.
So I think people can understand it, and the outlook is positive. So it's a great product. I think I want to give kudos to the regulators for allowing this innovation. It's and making this happen. So what happens to somebody who's interested in this product, who's sitting on our wonderful local currency?
That's a difficult question and quite a curve. I think in the prior program, you're actually talking about the issue to do with fungibility.
Yes.
Yeah. So we actually explored that avenue to say if somebody's has got their local currency in their bank account, and their bank allows them to use their ZIG to convert into US dollars to purchase the asset. Because let's be quite frank here. The asset is domiciled in a foreign currency.
Okay.
And at some point, you need to exchange it so that you purchase the asset. So I think that's the other homework that the regulator needs to do, to have a fully fungible currency, so that even if you are holding ZIG, you're not precluded to
From
some of these
participating.
assets.
Yeah.
Because I think it's. I mean, if we can cross that line, because look, on the South African side, that's literally what we're doing. We're coming with our US dollars, they're converting them into rands, and we purchase the assets. And on the reverse side, even the dividend that is coming through is coming in US dollars. It's not coming in rands. It's coming in US dollars, because their system just says, okay, rand, US dollar,
Boom. It's fungible.
it's fungible. But again, to maybe throw back the curveballs to say, in terms of the currency that's dominant in Zimbabwe right now, is it the ZIG or is it the US dollar? So maybe let's deal with what's present.
The reality on the ground.
Yeah, and maybe the regulators can also assist us, because we also have that local currency, and we definitely have people that actually want to convert that and actually purchase this asset. So some homework for them as well.
So, gentlemen, we have to bring this discussion to an end. Shumba, your final words?
No, look, kudos to you and your team. I think this is a fantastic product. The market has wanted this for as long as I can remember. Because everybody understands gold, and you cross the line. You've got a product. It's live. It's working. It's tradable. I take my hat off to you and your team.
Thank you.
Phenomenal job. Well done.
Thank you.
Okay. Simba?
Yeah, we've bought the product now. Be free to participate in international gold prices. It's a first. We want it to grow. And I think it's a real adage to say, look, the financial services sector needed to innovate and give, the local market something that they can actually participate in terms of the gold market. Zimbabwe is benefiting right now immensely. The trade surplus is because of the huge gold price. Why shouldn't retail investors benefit?
If they want access to that upside, absolutely.
So,
no, 100%.
We're giving you that extra option. You're previously just limited to local assets. Here you are. You've gotten access to international gold prices. So let's join hands and help you with your investment journey in that light.
Thanks so much, Simba and Shumba, for do you realize that Simba is actually Shumba?
In which language?
It must be Kiswahili, right?
Really? I didn't know that.
Mutupo chiko na Simba.
I want to soko mkanya.
So
we thought we thought
The spirit had left.
we thought we had disposed of one
Mukanya, but
we got another
You
one.
can't get rid of it.
you can't get rid of these.
No. Thank you so much. We are particularly excited, and kudos to you and your team for that innovation. And for the longest time, the market has been clamoring for an asset that could provide inflation hedge, currency hedge, foreign exposure, and also just for us to participate in this commodity super cycle that we have had in the last couple of months, and having this, First Mutual Wealth Gold ETF being launched, and the successes that you have already achieved on its listing, I think it just shows how desperate the market has been looking for this kind of products. And it's really a challenge to other fellow players to say, let's innovate. We could actually be the ones to provide solutions to some of the challenges and problems that we may have within our capital markets. And certainly for us capital markets players, it's always good when we see a new product coming on board. I think over the months we've witnessed quite a sort of a sad development where you're either losing a listing or a lot of things are happening. So we want more innovators, and to First Mutual Wealth team, well done, and we wish you guys a great success with the ETF.
Thank you, Ranga.
Yeah.
Cheers. And to our viewers, you have a great weekend, and remember to subscribe to our YouTube channel, like, share, and comment. And whenever you think you've got a suggestion, please get in touch and tell us how we are doing. Otherwise, have a fantastic weekend, as we'll definitely have one.
Thank you.
Awesome.
We're out.
Cheers.
Cheers.
At First Mutual, our commitment goes beyond today. First Mutual Limited is a leading financial group that is committed to creating value through risk management, wealth creation, and wealth management, predominantly in the insurance sector. The group has more than 100 years of serving Zimbabwe by provision of economic dignity through its strategic business units. We have diverse interests in life assurance, health insurance, short-term insurance, short-term reinsurance, long-term reinsurance, wealth management, property sector, funeral services, and microfinance, housed under the following subsidiaries: First Mutual Life, First Mutual Health, and One Health Services, Nico's Diamond Insurance, First Mutual Reinsurance, FMW Property and Casualty Botswana, First Mutual Wealth Management, First Mutual Properties, First Mutual Funeral Services, and First Mutual Microfinance. First Mutual Holdings Limited, with a regional footprint in Africa, is a financial ally that provides economic dignity in one's life's journey. We are here to take you through your first steps and help you secure your future. First Mutual Health provides members with relevant cutting-edge healthcare solutions that enhance the wellness and lives of our members through a wide array of service providers. First Mutual Health has diversified by opening up its own medical facilities, including clinics and pharmacies, for customer convenience. When members join First Mutual Health, they become part of a family which is invested in their physical and mental well-being. As life takes you to greater heights, our Nico's Diamond Insurance Limited, a super brand which boasts of A+ GCR credit rating, gives you peace of mind, providing cover for personal and business assets. It has sturdy regional presence through its subsidiary company, Diamond Seguros in Mozambique, and associate company, United General Insurance in Malawi. Nikas Diamond has well-established linkages with key intermediaries, coupled with the successful adoption of alternative distribution channels, which have supported its business growth. Our reinsurance business unit, First Mutual Reinsurance, covers both property and casualty and life and health, with operations in Zimbabwe and in Botswana, trading as FMW Property and Casualty. The business is at the forefront of providing solutions for complex challenges in engineering, aviation, cybersecurity, agriculture, power and energy, amongst others. This is enabled by rich risk insight, unmatched technical expertise shared across 15 African countries, a robust balance sheet, and multi-tier value partner. First Mutual Properties Limited is a public listed company, and its principal activities are property investment, development, and management. It actively manages a diverse property portfolio that spans office parks, central business district, retail offices, suburban retail, and industrial. The growth of the company is premised around property acquisition and development. First Mutual Wealth offers a wholesale of investment products designed to meet investors with investment goals, horizons, risk-return profiles, thereby meeting different and unique client needs. We understand our different customer needs and know that as you grow, our support also grows. Through our microfinance unit, we are here to help you bring your dreams to life through financial capacitation, ranging from school fees loans, salary-based loans, SME loans, and more. No mountain is too hard for you to climb as you set off on your success journey with First Mutual Microfinance. And as the years pass, our commitment remains steadfast. Your golden years should be filled with joy and peace. First Mutual Life Assurance supports you every step of the way, offering a wide range of products for life assurance and retirement benefits through its two arms, namely individual life and employee benefits. And when it's time to say goodbye, First Mutual Funeral Services will give you the rest you deserve, leaving your loved ones with peace of mind. This is our promise to you as you travel life's journey, whether individual or corporate business. We provide financial solutions in our chosen markets that provide superior returns, ensure stability, security, and growth, underpinned by a strong balance sheet. You can tackle life with confidence when you have First Mutual helping you go beyond every step of the way.
Friday evening, ice in the glass, Mike's on the table.